market, you think, what's going on? Is it still possible to profit from this market? But I'm telling you, the opportunities are even better than before. Okay, and we're going to lay the foundations this evening and set the stage for you to properly understand how to profit daily from cryptocurrencies. So that's the value proposition that we're bringing. Okay, the knowledge you need to profit on a daily basis. We're going to build on that today. Then come Thursday, there'll be a second part, which will dive a bit deeper into what you need to do to take advantage of this space, and what an amazing space this is. So remember, tonight we're talking about the foundations. We're going to lay the foundations because we know there's a lot of new people here. You may or may not be new to cryptos. You may have been on the sidelines like me for more than a decade, wondering or waiting for that push, to get you involved with cryptocurrencies. That push is going to come this evening because you will understand what you need to know to get started in this space. All right, so it's profiting daily from cryptocurrencies. Let's go ahead and kick this off, and I believe everyone can see the slide. So if you can see the slide, just put the 2 in the chat. So I just want to be sure that we're all on the same page and you can see what we're talking about. Excellent, excellent. Okay, so this class is going to be a bit interactive. So I'm going to be asking for feedback. I'll use that feedback for 2 reasons. 1, just to be sure that, nothing funny is going on with the network. And 2, I want to see who the serious students are, right? So we're paying attention. This is not one of those things where, you put the volume on mute and you go listen to something else. No, right? You need to focus here so that you get what we're talking about. Okay, so let's talk about what we are going to talk about, right? And then let's set the stage that way so that we know what we're going to cover. And it's 8 things that we're going to look at today as we build the foundation for this conversation. I'm not going to read these individual things one after the other. You can look at this, take a screenshot, that's fine. But just bear in mind that we are starting a journey this evening that will take you from the very foundation, why you need to get involved with digital currencies at this time, all through to how you should keep your digital currencies safe. Okay, so that's a whole journey that we're going to cover over the next, 35 to 40 minutes. Okay, so just stay with me here as I take you on this journey. If you do have questions, feel free to hold on to those questions. We'll leave a couple of minutes at the back end so that we can deal with that. But remember, this is all going to be very, very basic, introductory, foundational conversations that we are having, because you need this for the rest of the discussions that we are going to have. Okay, so in case there's anybody here, right, I don't believe that there are still many people who do not understand the potential of digital currencies. But I'm surprised every once in a while when I have conversations with people and they don't really see the potential of digital currencies. And what will I say? I can't really blame you, because just 12 months ago, I was in that boat. I felt there was value, but I was struggling to find a structured way to get in, with the right information and not just noise or hype. But thankfully, I found that on this platform, and I'm sharing that knowledge with you today so that you have a no hype introduction to crypto. So let's start with the why. Why should you get involved with digital currencies? Okay, I'm only going to use one slide, okay, to show you why. And if you live in Nigeria, this slide should immediately make sense to you, even if I don't say anything, right? Once I show you the slide. Okay, so if you're ready to see the slide that I'm going to show you, go ahead and put a 3 on the chat, because I really don't need to say anything once I show you the slide. Once you see the slide, you will immediately understand why you need to get involved with digital currencies. Okay, I see a lot of 3s. You're the ones that asked for me to show you the slide, so I'm going to show you. Okay. So this slide is everything you need to know, right, about why you should get involved with digital currencies. I talked about people who live in Nigeria. Some of you are only on this call because you don't have public power and you're running a portable generator that may or may not be running diesel as the fuel. Okay, so it may be running petrol or diesel, but let's say you are one of those people running diesel in your generator so that you can access this call right now. Look at what has happened to the price of 1 liter of diesel, right, from November 2020 up until March. It's funny, when I was preparing for this slide, I mean, the data point was 545 naira for a liter of diesel, okay, coming from 190 less than 18 months ago. So this is not a chart of cryptocurrency, just so you're aware. This is a chart of the price of diesel, what it has done in the last 16 or so months. It has nearly tripled. And even though this chart on the left, is bad enough, okay, we woke up this morning and what did we hear? Oh, it's not even 545 anymore. It's now 625 in some places, okay? If you're on this chart and your salary has increased in this proportion from 190 to 625, I won't say you should put anything on the chart, but just think about it, right? Okay, so this is Nigeria, where a lot of things revolve around the price of diesel and petrol. Okay, and if you have diesel going this high, you know what that means, right? It means every other thing is going to go up in price, okay, if they haven't already. Food items, school fees, all the other things associated with petrol and diesel, they would likely go up in price because of this. This is what drives our economy. Okay. If for any other reason, right, this is why you should pay attention to what's going on with digital currencies, because no one's salary has increased by this much. And it's very unlikely, if you're running a business, that your margin has increased by this much. In fact, your margin, depending on the kind of business you're running, may have been threatened by this kind of escalation in price. Okay, so this is one very, very important reason why you should consider digital currencies. Okay, just look at how prices have escalated. Digital currencies can give you an advantage to deal with this kind of situation. Right, so let's move on and let's break things down a bit. Okay, so if you're here and you're one of the veterans in the family, you may be familiar with this slide. That's fine. But for the guests that we have on the call, right, there's a lot of confusion about what digital currencies are. But I like to say that if you know the 6 things on this slide, then you are able to confidently describe what digital currencies are. These are the only things that matter if your goal is to learn how to profit from digital currencies. Nothing else is important. Okay, I can tell you that with confidence. Okay, so knowing how the underlying technology works is not necessarily relevant to knowing how to profit from digital currencies. That's why it's not all knowledge that is useful. You need to focus on the ones that will help you achieve the objectives that you're looking for. So 6 things on this slide, and we'll go through them real quick, because these are the 6 things that define a digital currency. 1, digital currencies are assets, digital assets based on something called blockchain technology. That's all you need to know. Do you need to know how blockchain technology works? No, you are not studying to become a computer scientist. You want to learn how to profit from digital currencies. Okay, you can gain that knowledge later on, right? It's fine. But do you necessarily need to know how blockchain technology works to profit from digital currencies? The answer is no. Just know that it is possible to create digital assets based on something called blockchain technology. And those digital assets turn out to be digital currencies. The next thing you need to know about digital currencies is that they are very, very difficult to counterfeit. Okay, so if you think it is difficult to counterfeit your normal currency notes, with digital currencies, it's even more difficult to counterfeit. And that's the reason why some of them are very valuable, okay, because of this property, this quality. The third thing is that they are a viable alternative to something we call fiat currency. So fiat currency will be your naira, your dollar, your pound, whatever currency that is issued by a central bank. That is fiat money, okay? Because that currency can be issued, it can basically be printed from thin air. So that's where the term fiat comes from, okay? But as we saw on the previous slide, fiat currency tends to be inflationary, meaning the value will go down over time. Purchasing power will go down over time. That's the nature of fiat currencies. Digital currencies, okay, at least the ones properly designed and the ones that have a viable use case, they will tend to go up in price over time. Okay, so they are a viable alternative to fiat currency. Number 4 is centralized institutions like central banks and governments have significantly less control over digital currencies than over fiat currency. Okay. Now, obviously, a fiat currency is issued by a central bank. So if a government wants, they can freeze everybody's bank accounts, okay, or restrict how much you can withdraw from a bank account. That's something that governments can do. Everyone here would probably be aware of what's going on in the Ukraine at this time. Very unfortunate series of events. But one of the headlines that came out from what's going on in Ukraine is this one right here, right? And you should be able to see my screen, where in order to manage the economy, the government actually started limiting how much you could withdraw from your bank account. Okay, because they're trying to prevent everybody from rushing and withdrawing all their money from the banks at the same time. Okay, so just imagine this is a queue of people, right, at an ATM, basically just waiting to access whatever limited funds they can have access to. Now, remember that it is their money in the bank account. Okay, but here the government has basically said, even though it's your money, right, you do not have access to all of your money. So even though it's your money, you're not really in control if you leave it in a bank. That's the moral of the story here. So digital currencies, on the other hand, are not susceptible to this kind of control by a central bank. Okay. Now remember that the fifth thing is all digital currencies are valued in US dollars. If you're trying to compare the one digital currency to another, okay, we use the US dollar, to compare one to the other. This last one here, sorry, this should be 6. This last thing here is probably the most important characteristic, and that is that not all digital currencies are useful. Okay, that's something you need to keep in mind. Okay, so the fact that something is a digital currency, or the fact that somebody is advertising to you on social media, come and buy currency ABC. Okay, it is a digital currency or a cryptocurrency, and it is going to go up by 10,000 times in the next week. That's not a reason for you to go and buy. Okay, because many of them, in fact, if I put out a number, it will be about 90% of them are not useful. They are just jokes or things that people have created because they want to make money quickly off people who do not know. So if all this makes sense on this slide, go ahead and put a 6 on the chat. Go ahead and put a 6. Let's just be sure that you've taken cognizance of all these qualities that we've seen of digital currencies. Okay, great. Now let's move on real quick and let's talk about 2 different types of digital currencies. But before we come here, I usually like to start with this website to show you where you can go to look at a list of digital currencies. Now, there are different websites you can do this on, but this particular website is called CoinGecko. Now, it helps you do some initial research on digital currencies that are out there. But for our purpose this evening, just think of this as a list, a place you can go to and you can, look at the different digital currencies that are out there. So if you come up to the top here, there's a little over 13,000 digital currencies listed on this website. Okay, start with Bitcoin, Ethereum, and then you move down the list to some other names that you may not necessarily be familiar with. But the point is, you can come here and you can look at this whole list and see some other attributes over on the right for these digital currencies listed here. Now, a popular question that emerges at this point is, we have over 13,000 of these digital currencies. Okay, as in, just help me make sense of this list. Okay, because I really don't expect anyone to start from number one and then just start reading through to the end till you get to 13,000. Is there a way, right? A way that you can think about this list that will give you, an insight into how digital currencies work, so that as you are starting your journey, okay, maybe you're trying to talk to someone, or you are even looking to understand how this space works. How do you process this list in your head so that it will make sense? Okay, that's the purpose of this slide here, to just tell you that there's really two types of digital currencies. So that whole list that you saw, we could divide that list into two. Okay, there's really two types. One is what we call the volatile digital currencies, and then we have the stable digital currencies, also known as the stable coins. Okay, and I have 6 examples of each that we can go through. So volatile digital currencies, quite simply, are digital currencies that are designed to go up, or to fluctuate in price over time. That's the way they are designed. Okay, so Bitcoin. One of the reasons you may have heard about Bitcoin is, when it has gone up to all-time highs. So sometime last year, Bitcoin went up to, $63,000, $65,000, right? And there was a lot of noise, there was a lot of buzz in social media at that time. Okay, so Bitcoin is a very good example of a volatile digital currency. Its price fluctuates over time. The same for all the other 5 listed on here. Okay, now the fact that these things are listed here isn't a reason for you to go buy. These are just examples to show you that there are digital currencies that fluctuate in price. And then you have this group of digital currencies over on the left that are designed to be stable in price over time. So they are designed not to fluctuate in price. Okay, so in this particular case of the 6 examples on here, one of these digital currencies on the right is pegged to the US dollar. So 1 USDT is 1 US dollar, equivalent to 1 US dollar. That's the sense that you should have. Okay, so that's a stable digital currency. Now, each of these categories of digital currencies, they have their own applications, the way you should use them, and strategies that you can use to profit from them. That's not the point of our conversation today. Remember, today is foundations. Just understand that there is group 1. Group 1 will be any digital currency that fluctuates in price over time. Group 2, any digital currency that is designed to be stable in price over time. Okay, so if that makes sense, put stable on the chart. Okay, so that we'll be sure that we're all together. All right. If you understand the 2 different types of digital currencies that are out there, go ahead and put stable on the chart. Good. All right. Okay. So remember the journey that we are taking, right? We've started with why you should get involved with digital currencies, right? It will give you an edge over dealing with fiat currency, your real world money. That's one thing that you should think about. And then 2, we've talked about the 6 most important qualities of a digital currency. Okay, the ones that matter if your objective is knowing how to profit from them. If your objective is something else, some other qualities will apply. But if you want to know how to make money from digital currencies, those 6 qualities we looked at, those are the things you need to know. And here we are at the 2 different types or categories of digital currencies, the volatile and the stable. Let's make progress on to the next thing, right? And we've talked about what digital currencies are. Now, if you're going to buy them, right, where do you go? Right? How do you buy a digital currency? So just thinking about where you are right now, if you've never, ever bought a digital currency before, what are the possibilities? How can you acquire them? All right, good. So you really have two options, okay, for acquiring digital currencies. And the first one is something called a centralized exchange. Okay, a centralized exchange will be very, very similar for those of you who have bought stocks before. This will be very similar to a stock exchange. So, you know, you would go to a stock exchange to buy stocks or shares. Okay, to buy cryptocurrencies, you can go to a centralized exchange. The centralized exchange will accept your real world money. So naira, pound, dollar, shilling, you know, the South African rand, whatever it is that you hold. The centralized exchange will accept your real world money and they will give you the equivalent in crypto. Okay, so that's how centralized exchanges work. That's why they exist. Okay. Also, on a centralized exchange, you can also exchange one cryptocurrency for another. So those are the two things you can do on a centralized exchange. You can use real world money to buy your crypto. You can exchange one cryptocurrency for another. And I have three examples of centralized exchanges on here. So there's Binance, Kraken, KuCoin. There are several others. Okay. In fact, let's just go ahead and put some examples on the chat of centralized exchanges that so for those of you who are more veterans in the cryptocurrency space, just go ahead and put some other centralized exchanges that you've used on the chat other than Binance, Kraken, or KuCoin. There are several others. I just want to be sure that people on here are familiar with these ones. Good. That's a very good example. There's Hotbit. Yeah, I was expecting Coinbase, Crypto.com. Okay, that's an interesting one, Samuel. Roku. Okay, Crypto.com again. Yes. So I mean, there's several centralized exchanges. The point is, you can go to a centralized exchange, bring your real world money, and exchange it for crypto. Now, there's one very important characteristic of a centralized exchange. Okay, you need to identify yourself if you're going to use a centralized exchange. Now, what do I mean by identifying yourself? Most of the more regulated centralized exchanges will ask you for a means of identification. That can be like an international passport, driver's license, or some other government issued ID card. Okay. Why do they do that? Okay. Because they are looking to prevent, money laundering, anonymous people moving gigantic sums of money, and we are not able to identify who's doing that. Okay, so money laundering is a big thing. That's why centralized exchanges, one of their requirements for them to pass the test by a regulator is that they will need you, the end user, to register and identify yourself, okay, before you can use a centralized exchange. Okay. The flip side to that is if you are using a centralized exchange that claims that you do not need to register and identify yourself, I suggest you do your research properly about that kind of exchange, okay? Because this is almost always a universal requirement, to prevent money laundering on the centralized exchange. Let's move on to the second way you can acquire cryptocurrency. You can use something called a decentralized exchange. Okay. Now, how do you distinguish between a decentralized exchange and a centralized exchange? For the decentralized exchange, you do not need to register. You don't need to provide your email. You don't need to provide an ID card. They don't really care how old you are, where you live for the most part, what you do for a living, or if you even have a job. They do not care. Anybody can use a decentralized exchange. Okay. The only way you are identified on a decentralized exchange is by the address of something called a wallet, which is a way you can, store crypto. We'll talk about that soon. So anybody can use a decentralized exchange. And this is one of the appeals for cryptocurrency. that without signing up with your email or providing, any means of identification, you can just start using these things. However, what that means is on a decentralized exchange, more responsibility for security lies on you, the user, because you really don't know who is using this exchange. You really don't know. Okay, you just know that there is a wallet address. You don't know who the person is. So that means you need to take extra precaution as a user of a decentralized exchange when you're signing up. But we'll talk more about that today and then on Thursday as well. Decentralized exchanges primarily exist to help you exchange one cryptocurrency for another. Okay, so you can't carry real world money like dollars, actual dollars, to a decentralized exchange and buy crypto. That's not possible at the moment. Okay, there are very, very few exceptions, very limited exceptions where you can do that, but for the most part, you can't. Okay, you can only exchange one digital currency for another. Okay, and I have 3 examples listed there. There's Uniswap, QuickSwap, Trader Joe. Some of you, the veterans, will know PancakeSwap as well. So there's several examples of decentralized exchanges out there. What's important is how you identify yourself, whether or not you need to identify yourself, or whether or not you can use real world money there. Okay, that's what distinguishes a centralized exchange from a decentralized exchange. Okay, all right. You know what digital currencies are, you know where to buy them, but when you buy them, where are you going to keep them or store them? Where are you going to keep them? Okay, you have 2 options really for storing your cryptocurrencies when you buy them, when you acquire them. Unsurprisingly, the centralized exchanges that we talked about on the previous slide, they also give you wallets to allow you save your cryptocurrency. So Binance, if you buy cryptocurrency on Binance, you can store your cryptocurrency on Binance as well. Okay, same with Kraken, KuCoin. And again, I must say, depending on where you are, you do need to do your research and find out which version of these websites is regulated where you live. Okay, for instance, if you're in the US, you can't use Binance.com. You must use Binance.us. Okay, so you need to do your own research and understand what version of these websites, or if at all, they are even regulated where you live. There's no such issue with decentralized wallets as yet. Okay, now, decentralized wallets are a bit different. These ones are specialized software that you can access for free, download for free, and they allow you to also save your digital currencies that you buy. So probably the more popular ones will be MetaMask and Trust Wallet. Okay, a few of you here may also be aware of TerraStation as well. But by far, MetaMask, Trust Wallet, they are the most popular ones out there for decentralized wallets. So these are your options for storing crypto. Now, you might be asking, which option should you choose? Which one is better? I would say hold on to that question, because we'll answer a bit about it today, but more as we continue this conversation, because the best way for you to really understand how these things work is to use them. So come Thursday, we'll do an example, a live example with a decentralized wallet, and then show you really how easy it is to move money around, right? Using these tools, okay? But just for now, suffice it to say that you have 2 options to store your digital currencies, either a centralized exchange wallet or a decentralized wallet. Now, I expect a question here, right? Why do I have the word store in parentheses here? Well, the answer really is you're not really putting any cryptocurrency inside a wallet. Okay, the wallet is really just something that gives you access to cryptocurrency that you own. And I like to use the analogy of your bank account today. So for you to access your bank account, typically you'll be required to provide your account number and a password. okay, on the internet banking site for your bank. And then, once you log in, they'll show you how much you have. Now, the fact that you have an account number with a bank does not mean that you can wake up tomorrow morning, show up at your bank, and demand to see the physical container that has your account number on it. It doesn't exist. Okay, so the bank just shows you an account number, and they know how much money is mapped to that account number, or basically how much money you own. And that's the same way cryptocurrency wallets operate. Okay, so especially with decentralized wallets, you would have an address that tells you this defines, your name as the owner of this wallet. Okay, and once you have, the password, and something will show you the secret phrase to access that decentralized wallet, you can log in and see how much digital currencies you own. But it doesn't mean that you're actually keeping digital currencies physically inside any container. No, that's not what they are. So just bear that in mind. That's why store is in parentheses, because you're not really saving money in a physical wallet. You're just using a piece of software to access the digital currencies that you own. All right. Now, let's keep this conversation going, and this is probably the reason why many of you jumped on this call. Okay, so this call was profiting daily from digital currencies, whether price goes up or down. Okay, so of course we have to have a slide that talks about how to profit. Now, this is just the foundation, right? Because subsequent conversations will go into specific strategies and the tools related to those strategies that you can use to profit. Okay, but you need to understand this foundation before we jump into the markets and buy, sell. No, this is where you start your journey from. Okay, with education. Okay, now there's two ways you can profit from digital currencies. Okay, one is you can decide to approach the digital currency markets as a trader. Okay, or you can decide to approach the markets as an investor. Now, these two approaches, you don't have to be one or the other. You can choose to be both. Okay, but there are two very, very different styles of profiting from the digital currency market. Every other way out there, okay, for profiting from the digital currency market falls into one of these two categories. You're either approaching the market as a trader, or you're approaching as an investor. And there's two important, characteristics of each. So you might want to ask, how do I know a trader? How do I know an investor? Well, really, a trader generally has a shorter time frame for profiting than an investor. So a trader is really looking to get into the market and then get out over a short period of time, generally. Okay. The investor, on the other hand, is more concerned about long-term value appreciation. Okay. And as things appreciate over time, that's when, they see profits, or they're able to take profits. So their time frame is more in the months to years category. Now, it's important to understand the distinction between these two time frames. Okay, because when you start confusing one for the other, you might end up using an investor strategy as a trader, and that's a formula for disaster. Even worse, you can decide to use a trader strategy as an investor. Okay, and then you're getting into trouble. By the time we go into the different strategies that you can use to profit, okay, which we will have in subsequent conversations, you will clearly understand what that means. But for now, just know that the time frame is really what distinguishes the trader from an investor. The trader is not looking to sit there for years, before he gets out of the market. No, the investor is the one with that mindset. Okay, he may exit the market earlier than a couple of years, but the investor is prepared to look at this from a long-term perspective for value. The second distinction is For a trader, you do not need to own cryptocurrencies in order to profit from them. Okay, it's important for you to understand that. Okay, you don't need to own crypto as a trader. You don't. Okay, there are ways you can gain exposure to the price of cryptocurrencies and profit from the movement in price without owning Bitcoin, Ethereum, or all the other names. Okay, now that may appeal to some people who are concerned about the volatility in the prices of crypto. That's how they move up and down over time. Okay, and they still want a way to profit, but they don't want to hold the cryptocurrencies, for any period of time. So if you're that kind of person, then probably your mindset is more around the trader mindset. But if you're an investor and you're like, yes, I'm in this for the long term, I understand I need to hold cryptocurrencies as an investor for the long term if I want to profit, or at least have strategies that will tell me when I need to move money from one cryptocurrency to another that is likely to give me better profit potential, then that's the way an investor thinks. So an investor is thinking more about, okay, what's in my portfolio and what are the different types of risks that I am managing so that I can profit over time. Very important for you to understand this slide, trader versus the investor. Like I mentioned, you don't have to choose one path. Okay, you can be both. Okay, you just have to design this to fit your lifestyle, but you do that with mentorship, right? With somebody who already knows how to do this. Okay, that's how you get the experience or the know-how to either tailor your future as a trader, as an investor, or both. All right. Okay. Let's talk about tools, and we're getting close to the end of this conversation. And you may want to take a picture of this slide because we will refer to this slide multiple times as we have this conversation. There are specific tools that we're going to use. Now, not all the tools are listed here. In fact, several of the important ones are not here, but we'll talk about that. Okay. But just thinking about everything we have said so far. Okay. Remember, we talked about the trader or an investor. There are tools that primarily these people or these mindsets, right, will use, these participants in the markets. There are tools that they use. So up at the top here, you have the tools that primarily investors will use when they're in the cryptocurrency space. And down here, you have the tool that traders will use in the cryptocurrency space. Well, it all starts with you having money, right? There must be some real world money that you're starting off with. Okay. You now decide how much of that risk capital you're going to allocate to investments or to your path as a trader. Okay, so as a trader, you really need access to something called a broker. A broker is someone who will give you access to the fluctuation in prices of cryptocurrencies. That's who a broker is, right? Really, in the simplest way. The same way you have a stock broker, okay, who is giving you access so that you can buy shares. You also need a cryptocurrency broker to give you access to the price of cryptocurrencies so that you can profit as a trader. There are more tools you will need to consider if you are an investor. And unsurprisingly, we covered some of those before we got to this point. We talked about centralized exchanges. Okay, so an investor, you must own crypto before you profit. Where are you going to get the crypto from? Centralized exchanges with your real world money. Okay. Once you have them on centralized exchanges, there's a number of things you can do. You can move your crypto to a decentralized wallet so that you can interact with the different websites that will make you profit from cryptocurrency. That's really the journey of an investor. Okay. For a trader, you really need access to a broker account to help you trade. Yes, I know. Platforms like Binance also allow you trade. I know. Okay. But we're keeping things very, very simple, especially if you're just coming here for the first time. All right. So that you know the journey of the trader and the journey of an investor. Okay, so investor, you're thinking more long-term, and you're thinking about cryptos that you can buy, hold, over time they go up in price, you're able to profit and do some other things to earn. But for a trader, you're looking for short-term exposure to the price of crypto, so that if it goes up, you make profit. If it comes down, you also make profit, right? Which is another difference between the trader and an investor. Okay, the trader can profit whether cryptocurrency prices go up or down. For the investor, you're waiting for cryptocurrencies to reach a value price, so that when you buy them, they are likely going to go up and appreciate in value. Okay, right. So now makes sense. Put a 5 on the chart as we come to probably one of the most important topics on here. Right, really, really important that we take it before we look at this next slide. Okay, fantastic. Okay, this slide alone, right, is let's just say it is very, very important. Okay, now let's go back and look at something that we considered, right? When we were talking about 6 different qualities of digital currencies, okay, we listed all these 6 things. Okay, now these 6 things are part of the reason why certain digital currencies are considered to be very, very, very valuable. Okay. However, these 6 reasons or qualities are also a reason why certain people have made it their life's ambition to steal the digital currencies that belong to other people. Okay. Because remember, if you move this thing into, for instance, a decentralized wallet, nobody can really tell who you are, right? You can just steal somebody's digital currencies, move it away, and profit off someone else's sweat. So it's really important that we talk about how you can keep your digital assets safe. Now, there is a hierarchy that you need to be aware of, okay? And they come with trade-offs. Now, I've listed 4 different possibilities here. And just know that security increases as we go down this list. Okay, security increases as you go down the list. Okay, that's important. So 1, we start with decentralized exchange. So places like Binance. Okay, remember I've said Binance, for example, is an example of a centralized exchange. If you buy cryptocurrency on there, they will allow you keep it there. Okay. The truth is, Binance at its core is a website. Okay. And what's one of the things that can happen to a website? I mean, you can, type www.binance.com and you'll get the response, server not available. Yes, it's possible. What that means is you can't access your money. Now, if this was a physical bank, of course, you can wake up, drive to the bank and say your website is not working. There is no Binance Bank that exists. So if the website doesn't work, you have to wait for it to come up. Okay, which is why it is very, very important for you to do your research and be sure what kind of centralized exchanges you are using, especially those ones that say, yeah, you know what, just sign up. Do you need to put your email? No, you don't even need an email. Just sign up. How will you identify? Don't worry, it's very safe. We are regulated, in the British Virgin Islands, and other exotic places in the Caribbean, right? You need to be aware, have red flags in your head when you're seeing things like that with a centralized exchange. Okay. So be sure that they are demanding for a way for you to identify yourself, and more importantly, that they are subject to the right regulatory authorities. Okay. So Binance is really a website. If the website is down, you have to wait for some time for it to come up before you can do anything with your crypto, before you can get your crypto out. Okay. And remember, it's Binance. So you don't really own the crypto, okay, because Binance is holding it on your behalf. Good. Things are slightly better with a decentralized exchange. Why do I say that? So Binance is a centralized exchange. If somebody successfully hacks Binance and makes away with cryptocurrency that is on there, they are not going to say, oh, it's one person that was affected. It's probably going to be, they're going to allocate it to everybody who has crypto. on that site. It is much harder to attack thousands of decentralized exchange wallets at the same time. So that's the one reason why a decentralized exchange wallet is a step up in security over a centralized exchange wallet. However, even with decentralized exchange wallets, you need to be careful about how you set them up, how you protect the login information that you are given so that you do not compromise, so that the access to it is not compromised. And we're going to do a live example on Thursday so that you see what I mean. So a decentralized exchange wallet in terms of security is better than the centralized exchange wallet, okay? Even better than a decentralized exchange wallet is something called a hot wallet like Exodus, okay? Which doesn't really interface with any websites. You know, it is its own website where you can keep cryptocurrency on it, okay? So it's slightly better than a decentralized exchange wallet, but it still needs access to the internet. So, you know, as long as your computer is connected to the internet, your wallet could be at risk. So you need to be sure what kind of internet you are using. Please do not be that person that is trading or investing in crypto and you are connecting to airport Wi-Fi. Okay, do not be that person, please. Okay, be sure what kind of internet you are using. Okay, you know, when you are trading these things, it's either you're using mobile data on your phone or some other internet provider that you have a long-term relationship with, so that you can go back and track, okay, all the activity on it and be sure what happened. Okay, the gold standard for security is something called a hardware wallet. Okay, and an example is the Ledger Nano. Okay, there are other examples on there. So this one enables you to essentially store your cryptocurrencies apart from the computer that you are using. So there is a gap between the storage device and your computer. Now, remember, you're not really storing crypto on the wallet, okay? You're just putting information on it that you have to connect to your computer to use. So it's something like a USB drive that you can connect to your computer when you want to use it. When you're done using it, you disconnect it from your computer, and there's absolutely no way that that thing can be compromised because it is not connected to the internet. Ladies and gentlemen, if you're on here and you have a long-term view about buying cryptocurrency assets and holding them, you absolutely need a hardware wallet. Okay, this is non-negotiable. Right? You need a hardware wallet. If you're still keeping things on your computer and you're trusting that everything is okay, it is not the best practice. You need a hardware wallet, okay, in order to properly protect this thing. So that's it about security and keeping your assets safe. So that's really what we wanted to cover in this conversation today. Let me see if there's any questions on the chat. If you don't have any questions, let's take a few, maybe in the next 5 or so minutes before I turn this back to Chairman to help wrap this up. Remember, what we've really done here is lay the foundations, right? This is the information you need before you start intelligently processing the list of cryptocurrencies, so you know how you take advantage, okay? All right, so there's a question here. What's your recommendations for? Well, so, you know, there's the Ledger Nano is really like the most popular one. There's other ones available on the market. What I would say about the hardware wallet is when you decide to buy one, right? You can just go ahead and Google hardware wallet. When you decide to buy one, be sure that you are buying the hardware wallet directly from the manufacturer. So you don't go to Amazon, Walmart, eBay to go and buy your hardware wallet, okay? Because like you know, the educators will say, you don't know how many hands have touched that wallet, okay? So ensure you're getting your hardware wallet from the manufacturer. How do you get the hardware wallets? Go to the website of the manufacturer. For Ledger, just go to Ledger's website, shop.ledger.com, and go and get your wallet, okay? Yes, they are not based in country. There's an extra bit of sacrifice that you need to take, right, to acquire these things. But is it worth it? I mean, You're spending $150 to protect to protect your crypto portfolio. It's a no-brainer. It is an absolute no-brainer to go through those hoops and get your hardware wallet. Okay. Can the hardware wallet be attacked by a virus? No, it can't. When it is not connected to your computer, there's a complete gap between it and the internet. So there's no way it can be attacked by a virus. Besides, it's not money in there, so there's no bug that is going to climb into it and eat your money, right? There's no cryptocurrency stored on a wallet. It's the information you need to access the cryptocurrency that is stored there. So even if you misplace your hardware wallet, all you need to do is buy another one, right? And you can basically recover access to your crypto. So it's not like if you throw it away, all your crypto is gone. No, absolutely not. Okay, so that's something you need to be on. Okay, looks like we're all good. So Chairman, I'll turn this back to you, sir, to help wrap us up.
Amazing. Who thought you're a crypto guru, and today you learned some very fundamental things that has shifted your mind? Put some DCS on the chat. Awesome, awesome, awesome. So when we say we are the best, you can see the value. Today is just day one.